Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are poised for a mildly positive start after a session of breather yesterday. SGX Nifty recorded a gain of around roughly more than 0.1%, indicating a mildly positive opening coming in for domestic markets. Wall Street ended up amidst record low volatility ahead of the eventful week. And Asian stocks, they've risen boosted by hopes for economic stimulus in China. FIIs, they've bought shares worth around 212 odd crore, and DIIs, they've too, at this point of time, have a contrary trend and have sold shares worth around 405 odd crore. In terms of FNOQs that we have on the list right now, we're seeing long build-ups taking place for 11 stocks, and based on the OI percentages, these stocks includes NTPC, Container Corp, and Hindustan Aeronautics, which has also declared the split of its share, JSW Steel and Tata Chemicals. 92 stocks have seen longs unwinding. Now, amidst this includes the like of Glenmark Pharma, Tata Communication, JK Cement, India Cement, and Britannia Industries too, which has seen long unwinding. Well, 69 stocks at this point of time, they've seen a short build-up. And based on that, this includes the like of Indian Energy Exchange, Kotak Mahindra, HDFC AMC, Deepak Nitrite, and Indian Hotels, which has seen short build-ups. Overall, if we talk about just the short covering activities, there are 17 names featuring in that list. And those includes the likes of MCX India, Dixon Technologies, Larsen & Toubro, and Hero Motor Corp, amongst other. But let us get going and discuss some stocks and strategies with Hemen Kapadia, Choksey Securities out there. Good morning, Hemen.
A very good morning to you, Nickey. Thank you for having me on the show.
The pleasure is all ours. I'm going to start off by asking you about the correction which has taken place in the market for the first time in the last 5 consecutive sessions. After the RBI monetary policy unanimously said they held on to the repo rate, but I think what came as a bit of disappointment to most of the market participants was the fact that the stance remained, the same. They were expecting a neutral stance to come in, but probably that the previous stance was reiterated. What do you make out of the markets, and what is the strategy you think, traders and the market participants can look out for now?
Like you correctly mentioned, Nickey, I think low volatility in the US, the volatility index in the US is come off significantly. And our VIX, Nickey, is also 11.25. So yesterday's correction was probably welcome in the sense we've been a bit overbought, Nickey. And if you see, normally you have the Nifty and the Bank Nifty moving in tandem. Now we spent around 5-7 trading sessions moving sideways. The Nifty almost gave a breakout, was pulled back down yesterday, but the Bank Nifty didn't do that. I mean, they have to move in tandem. So if the Bank Nifty would have closed above 44,500 yesterday, I think the picture would have been different. So we've been here and we are almost a 1,700 point move, Nickey, from the bottom. So frankly speaking, we have not seen a significant correction. We've seen some consolidation, no doubt. So we were looking for an excuse to correct, retrace, consolidate, and that's what happened. And yes, once again, we have this combination between the Nifty and the Bank Nifty. So 44,500 for the Nifty. And if you look at 44,500 for the Bank Nifty. And if you look at the Nifty, 18,750. A close up of these should then take the indices toward all-time highs. But they could take some time. But low VIX seems to suggest that is not much to worry about. I don't think we can expect a big sell-off. And firstly, no important levels have been reached. Yes, there was a gap on the daily chart, Nickey, which the Nifty, from 2 days before with the Nifty covered up. So that it has a tendency to cover up gaps. So I would be slightly stock specific at the moment rather than the indices. Both haven't, I believe, completed the consolidation, but the undercurrent seems quite positive even now, Nickey.
All right, so undercurrent seems to be positive. Would you suggest going longs on what level?
Okay, first support level, Nickey, for the Nifty is around 18,600. So that's where one can nibble a bit. And the major important support comes in at 18,442. So I suggest, in case you trade the Nifty, split your trade, buy the first lot at 18,600 The second lot at 18,442 with a stop loss at 18,350.
All right, that's the word coming in 18,600 level and 18,400 thereabouts. This is, you can split your trade between the two halves there, but also talk about Bank Nifty. We've seen a correction on the Bank Nifty out there. The strategy for Bank Nifty right now?
I think it would be slightly similar, Nicky. First, the first nibble should probably be at 43,800 and the second nibble at 43,600. These are support levels. So the logic behind why I'm giving these levels, and the stop loss at 43,400. In the meantime, today, tomorrow, day after, whenever, if we take out 44,500 and close above it, all bets are off. We're going to see a very sharp up move. We've consolidated. So these levels need to keep in mind. Once again, split the strategy, because we, from a very near-term point of view, Nicky, we still don't have a trending market. The market is slightly mixed. Undercurrent solid, but the market is mixed. So we probably need to play it like this till we see a trending move coming.
Sure. Hemen, I also want to ask you three profitable bets for our viewers out there.
Okay. I have a couple of stocks, Nicky. The first one is a buy on Reliance Industries. Reliance is important in terms of weightage, in terms of sentiment also. And Reliance has been rather subdued. So I have a feeling there's not too much of downside in Reliance. The weekly charts seem to indicate a very clear bullish bias, and we seem set for a further upside. But I'm giving an intraday sort of a trade. Buy Reliance at 2498, stop loss 2484, target 2526. Secondly is a sell call on DLF. Market seemed just a bit iffy despite a positive opening. So I have a sell call on DLF at 486, stop loss 491, target 476. So a buy on Reliance, a sell on DLF.
Buy on Reliance and sell on DLF. That's the strategy coming in. Clearly, participation from RIL will actually help the market scale another level high. The one that most of us are keenly watching out for. But I'm going to be quickly addressing the stocks and news and then address the market open with Hemen out there. But Avenue Supermart, that's the first one on the list right now that we have. There is an upgrade report which has come in from MOSL. That's to an extent of around, with a target price of around 4,200 rupees per share. And if you talk about overall the strategy and the rationale behind that move, it's well placed for an earning revival. There is a strong footprint addition which has been done by the company in the last few years. Good cost control in the weak same sales store growth environment, and competitive position has been intact for the online business. It's not burning cash, but is well prepared. IEX, there is a downgrade coming in on that one. The target price is to an extent of 105 per share. Right now, the stock has seen certain amount of correction already creeping in, but the few reasons that Antique has highlighted is, first, the spot price, which is expected to be higher than the bilateral prices, unlike in the past, which was favorable. That's a bit of negative coming in for IEX. There's a possibility of coupling operator can net power flow with each zone, posing a new challenge, and there's an incentive by the competitor which can eat into the volume growth of the company. Vedanta, well, a mixed bag of development for this one. The company, the parent company, gross debt has fallen to $6.4 billion as of May. Fundamentally, if you look at it, it's positive coming in for the company. But if you talk about the shareholders' point of view, which are also getting more of dividends being declared from Vedanta, where even the parent company is benefiting from the payouts out there, that might just decline. Keep an eye out on that one. Hindustan Aeronautic, there is a stock split and there's going to be a meeting which the board will be conducting. Kotak Mahindra Bank, there is a block deal which is going to be taking place. Do keep an eye out on that one also. Nifty 50, let's address the market open for you right now. We are looking at gain coming in for the markets. 0.1% of gain coming in for Nifty 50, 18,650 mark. That's the level that the market is sitting at right now. Remains to be seen if we can just quickly approach steadily that 18,700 mark. But Bank Nifty Index, let's bring that up for you and probably see if there is a participation that we can see after previous session correction that we saw after the RBI monetary policy review, with gains of around 0.1% coming in for Bank Nifty as well. Talk about the broader indices, mid cap and the small cap index out there. 0.1% gains coming in for the mid cap index, And if you talk about the small cap index too, that's where also there is a bit of outperformance instead coming in. Most of these indices are seeing gains of around 0.1%, and small cap index is the one which is garnering in gains of around more than 0.25% off there. In terms of advances and declines that we have on the list, 37 advances versus 11 declines. Market breadth is in the favor of advances. In terms of sectoral indices, IT stock, the IT basket at this point of time has, not doing too well in the opening deals, down and out with losses of 0.1%. But metal index, that's the one which is expecting some amount of stimulus data coming in from China, and on account of that, probably just holding their neck above the water. Pharma, well, you're seeing losses coming in on that one, but more so a flattish start with negative bias. If you talk about the FMCG basket, contrary trend playing out for the entire defensive names out there, with gains of around 0.1% coming in for FMCG. Infra too has been holding up with gains of 0.3% out there. And talk about the real estate index and the consumption story out there to see how is that stacking up for you. Well, realty index, if you see, most of the traction has been building in even for that one, with gains of around 0.1% out there. And the consumption basket, that's another one that we're tracking this morning, that remains intact at this point of time. Well, let's address the top gainers and the top losers that we have on the list right now, just to see where the flavor is. It's mostly the auto names out there. Hero Motocorp, which is topping the list out there, Tata Motors, and along with Britannia. So it's, the old economy stocks which are doing well. Titan, DRL, and now Axis Bank. These are some of the other top gainers that we have on the list right now, along with BPCL, NTPC, and Ultratech Cement. Ultratech Cement is clearly the one which we need to focus more on. On the last 3 consecutive sessions, we're seeing Ultratech Cement doing rather well. In terms of the top losers that we have on the list right now, Divi's Lab, Sun Pharma, Tata Steel, some of the top losers out there. Cipla, Eicher Motors, and Tech Mahindra. These are some of the other top losers that we have on the list right now. Hemen, I'm not going to hold up much of your time and come back to you and probably check with you at this point of time. The market has had a positive opening out there. Anything that looks attractive to you?
I think from a slightly positional point of view, cement stocks are good. You mentioned Ultratech, Nickey, something like Orient Cement, or even something like a MCX. So there isn't a humongous move, and I believe we need participation with the Bank Nifty for a further upside. But yeah, these are a couple of stocks, and yeah, the sugar pack also. But from a positional point of view, looks interesting.
All right, Hemen, we are going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. Well, let's address in the fundamental story right now. Rahul Arora, the CEO, Nirmal Bang Institutional Equities, is joining us to take us through all the fundamentals and probably the markets and the fundamentals. How are they shaping up? But before that, let's actually look at how Kotak Mahindra Bank has been doing, and Hindustan Aeronautics. That's also another one that we need to keep a close eye out on. That's announced in a split coming in on the shares. And that's also an interesting bet, right? I mean, it's been doing well for past consecutive few sessions. The board is going to be meeting in on June 27 for the subdivision of the equity shares. What I also want to talk about is the United Drilling Tools. It's an old field equipment manufacturer. The East investor Ashish Kacholia has sold in around 0.78% stake out for that company. The transaction has happened via an open market transaction, and that's happened at an average price of around 190 per share. So overall, Kacholia has held in around 2.8% stake as of March 2023. So that's the word coming in for overall for United Drilling Tools. And some of the names out there, market has been doing well. The market breadth has been more in the favor of advances, if you may look at it. So clearly, at this point of time, we are looking at some amount of bulls back on street with Vega. I mean, remains to be seen if there is going to be an all-time high that the market can scale in. But yesterday, we had Poranju Elliott, the ace investor, talking to us and how he thinks about the markets, the small cap index, and he spoke about Paytm, he spoke about old economy, he said that he probably missed, buying in Paytm at around 500 rupees per share, sub that level, but he doesn't regret because there are companies which, which are more easy to comprehend in terms of the business profiling out there. But we've been joined by Rahul Arora out there, who's going to take us through the fundamentals. Good morning there.
Good morning, Nickey. Thank you for having me.
Well, pleasure is all ours. I'm going to start off by asking you your assessment on the markets right now. It's flirting around that all-time high level. When do you see that happening? And which are the sectors do you think will drive that rally for the markets?
Well, honestly, Nickey, a bit surprised to see the Nifty where it's at because I think, realistically, we should have already been in a recession in the US by now because it's been spoken about since October of last year. But I think the strength of the US economy or the resilience of it has actually surprised many. And the fact that it now seems that the US Fed is probably done with its rate hikes and the Reserve Bank of India is also done with its rate hikes, I think there is some amount of optimism creeping in. Most sell-side analysts have already rolled over their earnings estimates and targets basis FY25. But even then, I think, there are not too many projections of GDP growth in India north of 6% for the current fiscal year. So in that backdrop, I think at an almost all-time high Nifty, I would probably exercise a little bit of caution. No reason to sell off if you're already invested. But I think given that fixed deposit rates may not rise materially from here, and in some cases have actually started to come off because interest rates seem to have peaked, I would say hold on. But a fresh investment, I would be a little wary of at this point in time.
All right, that's quite a contrarian view coming in from you. I mean, fresh investments, you're going to be wary of that probably because of the levels. How bullish are you on the markets right now? Let's start with that.
So I think, Nickey, there are two ways to look at it. Fundamentally, not that bullish, to be very frank with you, but because we are at the level that we are, and I don't think the levels quite justify the current fundamentals. Obviously, if you keep stretching and rolling over and saying FY25, 26 are going to look better, then I think you can probably justify any levels. But on current evidence, I'd probably be, let me put an Infosys-like phrase here, cautiously optimistic. That being said, I think the Nifty has spent a lot of time in this range of about 16,700 to about 18,700. I think it's been a 2,000 point range for almost 2 years now, or maybe even a little over that. So chances are if it breaks out on the way up, it will not just break out by 200-300 points. You may actually have a case where the Nifty heads to 20,000. But that's academic. I think the question is that a justifiable number? Maybe not. Can it head there? Yes, if it breaks out on the way up. But does that inherently mean I am bullish? Not so much so. So I think we need to, that's why I said, I think if you're already invested in the market and you made your returns, there's no reason to sell. But on a fresh investment from here, even if the Nifty was to head up another 8-10% from here, stocks about 15-20% higher, I think you may get better entry points is my sense.
Rahul, a partial agreement to what you say, but I think markets are more about sentiments rather than fundamentals, and I'm sure you're going to buy into that hopes more than that. Apart from that, let's just look at the sector, something like a new age companies in terms of the old economy stocks. Sure, financials have been doing well, and they merit a mention out there because FPI flows have been on the, at the 9-month high, and by virtue of that, financials are the beneficiaries out there. But between something like a new age company and old economy stocks, which one would you prefer and why?
So I think, Nickey, if you go back to say when the pandemic started and the first leg of IPOs that came out, a lot of these disruptors or new age companies listed in the first 12 or 15 months of that IPO cycle. I think if you see the second wave that of IPOs that came through the better part of 2022, the profile of the companies was materially different, right? All the loss-making companies had pretty much gone out of the window. You were back to profitability, looking at return ratios, so on and so forth. I think there is a place for these new age companies in a low interest rate, high liquidity environment where you have relative ease of private equity money flow or other forms of private capital flow. In a rising interest rate environment and receding liquidity environment, as you saw for the better part of 2022, or at least the latter half, these companies are going to suffer. Now, you're in 2023, where you are probably heading into a lower interest rate scenario. And you're also probably looking at a situation where while these interest rates may remain sort of stagnant or low for a while, you are going to head into a slowdown as well. in that backdrop, I'm not necessarily sure that they make the best trade at this point. I think there are pockets of the old economy, as you call it, that are still presenting value. So the way I look at it, Nickey, is that even at a 7,500 Nifty, there'll be stocks that are expensive. Even at an 18,500 Nifty, there'll be stocks that are cheap. And for that reason and that reason alone, I am not tempted to go in. Now, the point is, let's look at a couple of these names, like say a Paytm or a Nykaa, so on and so forth, right? I think you have Reliance Jio Financial Services that's entering the market very soon. We don't know what kind of a disruption it could cause to some of the existing incumbents, which are anyway disruptors. You look at Reliance, which has got into the beauty and wellness space. I think a space that you probably understand well. With respect to Nykaa, I don't know how the disruption will be there. So a lot of these disruptors could potentially be disrupted by larger players coming in. So I'd be a little wary of them and look at some of the stocks that are still from the old economy, but are presenting reasonable value even at this point.
Okay, so within the basket, a Paytm you've ruled out, Nykaa you've ruled out. In the old economy stocks, let's talk about something like Britannia, ITC, HUL. Does that fascinate you?
Extremely. I think if you looked at the Reserve Bank of India governor's speech yesterday, Nickey, I think he said that rural demand is reviving. I think that's a huge step in the right direction as far as the Indian economy is concerned. The Rabi crop is, seeming to be all right. All predictions on the monsoon so far are good. I think the weakening is only spoken about towards the end of September, October. So by all means, you should probably have a decent monsoon. And even if it's not, I think our reservoir levels on a pan-India basis are about 21% higher than a 10-year weighted average, barring Uttar Pradesh, which is a bit of a trouble spot because I think their reservoir levels are very low. But on an aggregate, if you exclude UP, I think even if rainfalls don't pan out in a as expected, I think it should be okay. So the rural part of the economy should be doing okay. In that backdrop, I think consumer staples, which has been taking a bit of a backseat for the better part of the last 24 or maybe even more in terms of months, there is a case. I think there's been a time correction, there's been a price correction, there's been an earnings reset. And the names that you took, Nickey, I think Lever, Britannia, they'll probably be at the forefront of it. ITC, of course, is one of the stocks that's doubled over the last 12 or 15 months. It's been the beneficiary of obviously low valuations and a very strong cycle on the tobacco side. And the fact that non-FMCG business margins are now edging double digits, hopefully over a period of time, even sustainably so. So I think consumer staples is definitely a space that could make a comeback. And I think, Nickey, while we're talking consumption, we could probably extend that to autos as well. I think, consumer staples won't come back in isolation. If the rural economy does well, I think there's a very strong case to be made for the commercial vehicle cycle of the market to continue doing well. So you'll have the likes of Leyland, Tata Motors that will continue to do well. And then, of course, two-wheelers like Hero, Bajaj, TVS, that will probably also continue to do well. I think Eicher Motors has done well at the expense of some of the other two-wheelers because the premiumization story has played out. But I think when you talk about rural, let's not just talk about consumer staples and extend that to autos and auto financiers as well, for that matter.
All right, so you've pretty much covered all the questions that I wanted to ask you, which was with regards to auto, it was with regards to FMCG. So I'm going to be smart here and I'm going to ask you an open-ended question of what do you think, which sectors now, which have probably not have been, they've not found the foot as yet in the markets, but the fundamentals are strong and the potential remains higher.
So, Nickey, apart from the two sectors that I mentioned, I think the two that I'd probably look at would be cement and pharmaceuticals. I think pharma has in pockets done well, but at an aggregate level, it's sort of been dogged by US FDA, by certain one-offs in terms of products, plant shutdowns. There's been a lot of things that has happened in the pharma sector over the last couple of years. And our sense is at an aggregate level, we should look at EBITDA growing by anywhere between 12 to 15% for the current financial year and the next. So if I take a 2-year CAGR, and which would essentially mean that the profit after tax should probably grow at about 15-18%, which is basically a margin expansion story. Top line, I think we should be good if they grow at about 10-12%. So very FMCG-like sort of a scenario. So I think pharmaceuticals is one space where I'd be relatively overweight. The other, Nickey, is that we're less than a year away from a general election. I think, even through the monsoons and on the other side of the monsoons, you're going to see a lot of, hectic activity on the capex side. Madam Finance Minister has already sort of laid out the plans from a capital expenditure perspective, and there's almost a 30-35% increase in the outlay that she's made. So I think a lot of these, whether it's roads, ports, airports, all of that will come through, maybe, like I said, a little softer through the monsoon, but I think come September, October, up to the elections, they'll pick up in a very material way. So I think a very important second order beneficiary will be cement. Let's not forget that crude oil prices, which were hovering, at the peak of the war, or when it just started at about 120 or thereabouts, is now down to about 70, 75. So it's going to aid cement companies where inventories are getting liquidated. Pet coke, coking coal prices are in a lot better position than they were some time back. So I think if you have a situation where you have a 10-12% kind of volume growth, I think margins would expand and profitability will be good. So I think apart from autos and FMCGs, the two sectors where I'd be relatively bullish on would be cement as well as pharmaceuticals.
Okay, I'm just going to quickly check about IEX. It's a stock-specific activity out there. The stock is down and out by 10%. It was down and out by 10% yesterday. Today also the stock has taken hit by more than 10%. The government has asked CERC to start consultation and implementation of market coupling. Now the fear is that this would reduce exchanges to just aggregation platforms and will have no role in price discovery. What do you make out of this development?
So, Nickey, unfortunately, not a stock that we track at our brokerage house. So, unfortunately, due to regulatory constraints, I won't be able to answer that. I'm sorry.
All right, Rahul, we're going to just leaving at that. Thank you so much for taking out the time and speaking to us this morning.
Pleasure. Thank you so much for having me.
All right, the pleasure is all ours, but indeed a good conversation that we had. Pharma and cement. These are the counters that Rahul Arora from Nirmal Bang Institutional Equities is bullish right now. But if you talk about IEX, that stock is taking it, it's taking a beating out there, down and out by 15-odd%. We did recommend the stock. We did talk about the stock rather in the opening deals where, Antique Security downgraded this counter. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.